You're looking to buy a new home or refinance a home and you have no idea what type of questions to ask because you're a little bit nervous of our Canadian economy? Well, my friends, most people in your shoes will relate to one of our stories that Dion is about to share with us. All this and more with a good friend, Mr. Dion Beg, right after this. Hit record, check. Yep. Here we are, my friends, with our favorite mortgage broker in all the land, Mr. Dion Beg. How you doing, my man?
Hey, Gary. I'm great, man. Got lots of stories for you today.
Excellent, because you know what? I think that's what we need right about now. There's so much going on with tariffs and US and Canada and the EU and Australia and everybody else. Let's just get down to good old-fashioned mortgage broker stories because we got you. I know you want to share about 3 or 4 stories today, and let me tell you, my friends, you're going to be in one of these stories. You could see yourself in one of these stories. I know it by talking to the number of people that I talk to in our networks, Dion. It's so nice. Here's one of my favorite things to say to people, and here's what I say: people like to relate to other people's stories. And one of my favorite lines is, "People in your shoes dealt with it this way." And maybe that's kind of the underlying tone of our video today. People in your shoes have dealt with it this way. So whether you're divorced or going through a separation, or you have students at school, or you're looking to buy a home with a friend or a partner, we've got you covered today. We got you covered. How's that sound?
All good. Yeah, we'll touch on some of those today for sure.
Excellent. Okay, so story number 1, divorced couple. Whether that's been you or your family member or your friend, we've all known someone that's gone through this scenario. And sometimes you sell the home and you just go live your 2 separate lives. And in other cases, you want to sell that home or buy a partner out, or you want to go buy your own. So I'm setting you up for that. Take us through this one.
Yeah, so look, sometimes people separate in marriage, and when that happens, they sell the property in many cases, and they each walk away with a certain amount of money. In this case, each of them walked away with something in the range of $400,000. And in some cases, we actually help both parties. That is, the husband and the wife each move on with their own lives, and that's what we did here. Each of them have basically moved forward. I'll talk about in particular the husband. So he was in a slightly lower income bracket than the wife, and therefore, for him to purchase, it was a little bit more challenging. And he wanted to make sure that monthly payment was going to be a number that he could manage. Because, one of the first questions we ask people, Gary, they come to us with these hopes and aspirations of buying property, and we talk about, how to qualify and what numbers you need and those types of things. But the first question that any good mortgage broker should ask you is, what monthly payment is affordable for you? Because that's the most important number, right? I can give you, this purchase price and this debt ratio and all these other things. But unless I understand, what is affordable for you, then we want to make sure, you're going to be, I'm not the one having to make the monthly payment. You're the one who has to make the monthly payment. I don't want to put you in a position that's going to put you in trouble. So we ran the numbers and we're like, you know what? You can buy this property. But he's like, oh, Dion, I don't think I can afford that number. I'm like, fantastic. Let's approach this with a different perspective. So tell me, what is that number that easily is manageable for you? And that number for him was $1,600. And as you and I both know, that's pretty small for a mortgage payment in the GTA today, right? And so I said to him, look, would you consider then buying a property where maybe you have 2 units and you occupy 1 unit and you rent the other unit? And he said, yeah, that's something I'd be open to. So we ran the numbers, and that monthly payment on that property he wanted to buy would be around $3,300. Okay, but the basement, if he was to rent the basement, that basement rental would be something in the range of $1,750, meaning his payment would be $1,550 per month. And he's like, you know what? That works for me. That'll be fantastic. And then I shared with him a real story of another client of mine who recently bought a similar type property, but because he was single, he decided he would live in the basement and rent the main floor. Okay, So I said, listen, here's another perspective. If you want to buy this property, but you live in the basement and rent the main floor for 2,300, his payment would then be $900 a month. And so we took this guy who thought, you know what, I'm not going to be able to afford a property. I can only afford 1,600 a month, and put him in a situation where all he has to pay is 900 a month by buying the right property. And again, divorced person, single income, starting life over again financially. And we're able to put him in that position. And I'll just, the cherry on the cake is, he knows about property growth. And in the conversation, we talked about owning this property for 25 years, and the ownership of this property should generate for him a net worth of close to $3 million by just taking that action today over the next 25 years. So, it's like setting this guy up long term as well.
I love it, and there's other pieces to this as well. As obviously you've saved him, in a sense, in his mind and budget, $700 a month or $8,400 a year. That's after tax dollars, my friends. That's a lot of money. And that's a vacation that he can put that towards anything. I mean, whether it's future investments or anything like that, or whatever it may be. That's what I love about when people come to you. You don't just, hey, we can afford the max and let's get them into a home because it's going to be great for everybody.
Mm-hmm.
No, they're what's the bigger picture here? And I think it's important for buyers and current homeowners to keep asking that question. Is this financially the right position for me today and tomorrow? It's that tomorrow question that we often forget about, right?
Exactly. Yes. And make sure it's comfortable. You don't want to be house poor and become a slave to your mortgage. It's about still trying to live life and engineer things in a way where you're still going to be able to live a good life.
Yeah. Yeah. Excellent. And I know we've talked about this on many, many calls before with that income helper, mortgage helper, all that kind of thing, however you want to label it. It provides tremendous opportunities if you are of that mindset that, I don't mind sharing where I live in a sense. And it does take a specific type of person to be okay with that. But there's, if you're okay with that, you, as you can see, it provides opportunities, which is pretty cool.
You bet.
Good stuff. Okay, let's move on. Story number 2. Students out of college, help us out here with this story because as we all get older, we all have students that are, or daughters and sons that are going to college or colleges and stuff like that.
Yeah, so this is sort of anecdotal, but in line with some of the policy changes that have happened at the federal level. So I have a client who we've been working with for many years. We're coming up to mortgage renewal, and we were looking at options. And, we always have a client profile, so we understand what their income is, the jobs they have. And this person had a full-time job at a college and a part-time job at Seneca College. And I was asking him about that job, and he said basically that second job is drying up. And I'm like, oh, okay, what's happened? He's like, well, he was on contract, and there are fewer students enrolled at the college now. And because there are fewer students enrolled and he's a contract teacher, he actually doesn't have any work for the second semester of this year. And so it's just anecdotal, but it just goes to show that the things that are happening at the federal level are trickling down. It's impacting this particular client of mine. Fortunately, not to the point that he won't be able to refi. We're still going to be able to look after him, but he's losing probably about 30% of his annual income because that school is being affected by the reduction in international students that's been sort of mandated at that government level.
And I think that's what people miss usually is that ripple effect. What's the ripple effect of these decisions? And by all means, I'm not saying this is a bad decision or a good decision. It's just have that open mind to learn what that ripple effect is and question it. Oh, because that ripple effect may or may not be an opportunity as investors or what, however you look at different things. So it's interesting. And we are not going to take this into a government driven or political driven
But as it relates to anybody listening who may be in higher education, in particular with independent colleges where they're on contract or don't have tenure, it might be worthwhile to acknowledge that your industry is potentially softer than it was previously. And if you do intend to do anything financially, you might want to do that while your numbers look good right now, rather than later on when maybe your position may be downsized. Right? I'm not trying to be negative here, but just be realistic and based on this story that I heard just today.
Yeah, actually, well, what's the old saying is you always go ask for money when you don't need money, right? In a sense.
Always the best time to ask for money is when you don't need it.
Yeah,
Yes.
yeah, yeah. Because you're in a power of you're in a position of better financial position. What's the word I'm looking for? You're in a better financial position. That's kind of that's what I'm
You
after.
got it.
Yeah,
You got it.
yeah.
Actually, and
Good.
you know what? That runs into another one, an older couple, Gary. She was a breadwinner, makes 100 grand a year, paralegal, but she knew she's going to retire soon. This just happened in the last week. We put an extra 200 grand HELOC on their home. They'll probably never need it, but again, just while she's got good income before she retires, let's go and I call this the insurance policy that you hope you never need, which is, if something happens, a life event happens 3 years from now, and you need access to fast money, you're better off getting it from your HELOC, your home equity line of credit, rather than a credit card. It's going to save you literally 20%.
Yeah, yeah.
Yeah.
That's smart, and that's the financial advice that we're looking out for today. Okay, talk to me about you sent another story here. Excuse me, about two sisters kind of coming together and looking to purchase a property, and they didn't think they could, and you showed them an opportunity where that was possible.
Yeah, so the circumstance is there are two sisters living together. Sister number one owns the property. She managed to own that property, so they're living together in her home. And sister number two wanted to buy her own property, but the numbers were so tight, she couldn't actually physically move out to that property and make that monthly payment by herself. And she wasn't able to buy a duplex just based on the numbers. She wasn't able to make the numbers work like that guy in the earlier story. But when I looked at the numbers, it was clear that she could buy, and in her case, it was a condominium under 600,000 in Mississauga. That's what she wanted. Um, and what I said is, if you were to try and live there by yourself and make the payments, it's not going to work. But I asked the question, are you happy to continue to live with your sister as you currently are? And she said, yeah, I am. I just wanted to make sure that, if I'm buying this place, I get, in particular in her mind, it was the first time home buyers land transfer tax break. Okay. And so she was like, I have to move into it because if I don't move into it, then I miss out on this land transfer tax break. And when I looked at the numbers, it's true. If you buy a property, you live in it, you're a first time home buyer, you're going to get a reduction in land transfer tax. In her case, though, the land transfer tax was only going to be something like 7 grand, and the saving would be 4 grand. So, she'd basically be saving 4 out of 7,000. And so that would be the loss. But I said to her, okay, are you open to the idea that buying this property will still serve you long term? And let's imagine for a second that you didn't pay 600,000 for this property, but you paid 604,000 for the property. Would you still buy it? Would it still make sense long term? The answer was, oh, of course, yes. If it was 4 grand extra on the price, then yeah, it still makes sense. I'd buy it. I'd buy it as a rental property. I'd rent it out to somebody else. And so that was the way in which I explained to her, look, foregoing this 4 grand in land transfer tax saving as a first-time homebuyer, because you're not moving into it, but in fact making it an investment property from day one. Yes, that's the negative, but the benefit is long-term. Your numbers are still going to be great. Your long-term benefit is still going to make you this several hundred thousand. And if that means you lose 4 grand in tax rebate, then it's still worth it. And so in many cases, Gary, it's like people are bending over to pick up pennies, and at the same time they're stepping over dollars, right? And our job is to say, hey, focus on the dollars, not on the pennies. In this case, the pennies were 4 grand was stopping her from making her move. And once she got over that, she's like, okay, I can move forward now.
I love it. I love it. And that's the essence of, the experience as well, and knowing the different types of questions to ask and helping people kind of see perhaps what they're stumbling on or stuck on in a sense. And by all means, are we not we're not saying, hey, every conversation needs to lead to a sale or anything like that. It's just education, and as you did, you educated that buyer on the bigger picture sometimes, and we get so laser focused on stopping and picking up that penny, or stopping and looking at this condo is perfect, but I'm losing out on this. But by that,
Correct.
as you said, she's losing out on something much bigger. Okay. So I just had the same conversation too that we're going to dive into. Variable rate, fixed rate. What's happening? Should I wait another announcement, which is coming next month? Are we going to get more drops? Like, who knows what's going on, Dion? And I know you're getting this question not every day, multiple times a day.
Yep. So I've got clients who are coming to renewal, they need to refinance, or they're looking to buy. And it happens more than once a week where a client says, hey, Dion, I want a variable rate. Okay, fine. I understand why, because it's predicted that rates will drop. But they're like, well, but I'm thinking I'll wait until the next rate drop because I want to make sure I get that rate drop. Okay. And what I have to explain to them is that when you take a variable rate, you will in fact get to experience that rate drop. If the rate drop happens next month or next year, if that's within the term of your mortgage, you will get a lower rate. Okay, so a lot of people think they have to wait until that rate drop to get that lower rate. So I'll give you an example, and I'll use round numbers. If today you're getting an interest rate of 4.25%, okay, variable, and at the next Bank of Canada meeting, they drop by 0.25%. Your rate will also drop from 4.25 down to 4% even. Okay. It doesn't matter whether you signed your contract last week or last year or 4 years ago, your rate will drop in line with the Bank of Canada rate drop. Okay. Now, to just further explain, when we get you a variable rate, what we are getting you is a rate based on prime, and ideally a discount on prime. So if prime today is 4.95, and today your interest rate was 4.25 that we could get you by contract, what that means is we got you a discount of prime minus 0.70%. Okay, 495 minus 0.70 equals 4.25. So what you want to look for when you're getting a variable rate is what is the discount that you're locking in, right? And so, and whatever happens to the variable rate, your discount will float accordingly. Okay, so if interest rates drop to if prime drops to 3.7, your rate would then be 3.0 because your discount was 0.7. So that's what you should be focusing on. Focus on the discount that you're securing on prime, not what is the rate, what's the timing of when I get this thing. That doesn't matter. What matters is your discount on prime.
Yeah, there you have it, my friends. And of course, as prime goes, so does your mortgage rate. So, heaven forbid, should it start going up, so does your interest rate, the prime minus or whatever it is. It fluctuates along with that, and that's the benefit. Some people love that because they see the savings out there, and you and I both have other clients that like that fixed payment every month because they can budget around that, whatever floats your boat, as it were, but knowing that prime rate still is on that downward slope. I still see it on that downward slope over the next little bit. And again, we say this almost every call, DM, but you can lock that in at any time, correct?
Correct. You can convert from a variable to a fixed at any time. You cannot do the reverse. If you take a fixed, you can't switch it back to a variable midterm without a penalty. But if you take the variable, you can convert to a fixed without any penalty or any cost. Okay.
Yeah.
But while we're on this topic, Gary, about variable, I want to talk about the two types of payments that are
Yes.
possible
Yeah,
with
that's
variable.
smart. Yeah.
Okay. And a lot of people call them fixed payments versus variable payments. In order to avoid confusion, let's call them a static payment versus a variable payment. Okay. So, guys, what we're talking about here are variable interest rates. And I'm going to share with you a conversation that I literally had 2 hours ago with another client. Okay. And I was explaining that some lenders, if you take a variable rate, when the rate changes, your payment will change. Okay. So, in the example I gave, I said, let's say your payment's $2,000 a month, okay? And let's say that the variable rate changes, and now the payment will drop to $1,900 a month, okay? So that was the variable rate with a variable payment. The alternative would be a variable rate with a static payment, okay? Let's say the rate drops. Your payment doesn't drop from 2,000 to 1,900. That doesn't happen. What happens is your payment remains at 2,000, but the proportion of your payment that goes to principal increases by $100. So the $100 reduction in payment in the variable payment on the static payment translates to $100 extra pay down on the mortgage, hence paying off the mortgage faster. So just know that these two types of payments exist. And I said to this client, if you tell me that you want one of these types of payments, that's fine. But every lender treats these differently. And so when I said to her, if what you're focused on is the best rate, then give me the freedom to just go to any lender. But if what you're focused on is a static payment, then I have to focus on only a certain segment of lender. And again, these are the conversations and questions that come up. If a person wants variable, but they want certainty of payment, then we'll give them a static payment.
Yeah, and that's important clarification too. And my friends, $100 a month or whatever that static payment equates to, that difference, it may not sound like a lot every month, but over time, that can have a significant impact on the
years. It could shave years off your mortgage, for sure.
Exactly. This is good stuff, Dion, and this is the type of conversations, my friends, that Dion has with clients. And if people watching today need that discovery call, how do they get a hold of you?
Yeah, kangamortgage.ca or Instagram at @Dion
There you have it, my friends. That's Dion Beg. Of course, I'm Gary McGowan. We'll see everybody on the next episode. Goodbye for now.